Strategy remains the same. So we'll just go over the regular thought process as usual for building bias for most of our trades so that, for anyone who is not familiar, they can, catch up and later on ask questions. But I believe most of our people here are intermediate traders, at least, if not advanced. So yeah, so this is basically all that you need. You're building bias and we use key levels mostly, or we use liquidity, or we use both. So, you have your higher time frame, your bias time frame. So we have for monthly, weekly, daily. These are good for building your bias. And then we have the confirmation time frames, which is just dropping a time frame lower to confirm that indeed, your key level, your rejection, or your candle closures actually align. So something I didn't write here is what actually matters. So for key levels, you are expecting a rejection. You're expecting a rejection and closure. And for liquidity, you're expecting a sweep and closure, right? So that's basically what you need. So once you have a sweep, for instance, if you are building with liquidity and you have a closure, you just need to go one time frame lower, check, do I have a break of structure or do I have a sweep of liquidity and a break of structure? And then all you need after that is to go to your entry time frame and look for your entries. Basically all you need. Types of key levels, which we all know: A shape, V shape, OCL, QM, FVGs, disrespected A or V shape key levels. So in 5 minutes or 2 minutes, that's, the strategy here, which we'll talk about later. Someone spoke about risk management and I just put something down. So we'll come back to that. So we can just go, review a few of the trades that, I took last week. The one that aligns the most clearly with the strategy is on Japan 225. However, the other two had to do with time and price, and they had to do with day and price, right? So especially when you are looking at the expansion days and the previous price action, right? So from the weekly, let's go to the weekly on this guy. We have this range, which was created 2 weeks ago. This you're seeing is a bearish, you can call it a bearish range. All right, for most times, the initial draw on liquidity or the first draw on liquidity of a bearish candle like this is supposed to be down here. But we had this sweep, which was indicating that, price might probably want to come all the way up here. We also had this key level. So in this case, we are somewhat building bias with key levels, but also more or less with liquidity. So after this sweep, we had, a series of buys, and then we had this sweep to the upside of this candle. Now, since this was last week, indeed, what we should be expecting this week is that this low should go. However, experience, can take me and allow me to take my entry directly from the weekly. So aside from sweeping this key level, liquidity actually, highs and lows are also key levels. Aside from sweeping this previous weekly high, I also had, this is also a key level here, but we also have this fair value gap and this key level overlapping. But if you go to the 4 hours, you see the exact key level that I selected, right, which is here, which was overlapping this imbalance, swept liquidity here, gave me a good reaction to the downside, gave me a 2-hour confirmation entry or a 1-hour confirmation entry. But if you look at it also on the 30 minutes, you can see clearly we have a sweep and a break right here. So that was basically where my entry was. My target's still here. That's low. So actually my expectation for this coming week for this guy is simple. We complete our liquidity cycle. We sweep this this high here. So if you look at it back on the daily, what we have here is a key level here, and we have this as liquidity. So we should be expecting that price will come here, give us some kind of reaction, and sell till this low, right? So that will be an expectation, because from here to here is the weekly range, right? So from here to here is a weekly range. So we can expect that since we have a sweep of liquidity and a candle closure on the weekly, we can start to confirm our bias, if you like, from the daily. You see a nice sweep of liquidity, but that's going to be much longer. We can just take it directly from the weekly. And if you saw this is a 4-hour break of structure as far as I'm concerned, we can expect that this high is what created all of this impulsive move. And we can take here as an order block, this as liquidity, and take it down. It's an expectation. Even though we have a couple of break of structures to the upside, I still feel like we are very bearish, at least till this low goes. Overall, this is a range that we've been trading in, but overall, again, the overall bias has been bearish. So that's what I had on GER40, and and on tomorrow, next week rather, my expectation sometime on Tuesday. This might happen on Monday because, again, time and price. Next week is the last week of the month, right? So most of the final moves would happen before 27, or let's say before, like 27. Anything from 27, you can expect the market to start to adjust again. If you know the anatomy of a candle, right, you have open, high, low, and close. So if you're expecting that your month has already created a range, maybe it has created the high of the month. Let me just give an example quickly. I'll use a weekly candle for that. So if you have expected that a month has given you, it opened, this month, for instance, opened here, it will give you a high, it will come down, give you a low, and then it will give you a closure. So you can expect that even if your whole month had been bearish, something will happen in the last 3 days of the month, which would be adjusting price back to where it's going to close. So you need to pay attention to those things. That's why time is very important also. So at the end of the day, I should be done trading by, depending on what your strategy is, by 27, you should be literally almost done with the month, basically done with the month, except if you just want to risk one or two things. Same thing with Monday and Friday. I always say this thing. Anyways, back to the breakdown. I had something very similar on US30. Same thought process coming from the weekly. So for the weekly, we had a range. We had this range, sweep of this weekly high. The low had been standing prior to last week. This low was what my main target was, but there's an expectation that price might get here. All right, so this one, very simple. You had this sweep 2 weeks ago. This was last week. This was the previous week. So 3 weeks ago, we had this sweep and closure coming down to the daily time frame. We've confirmed our bias is bearish if we are using the weekly. This might also serve as a break of structure. It depends on how you want to look at it. It might not be a clean one, but best not to use it, but it can serve you if you want. We had a daily break of structure right here, and ever since we've been confirmed bearish till at least this zone, if not this zone, right? So all you need was, for any of the other entries, because my prior breakdown, I think I had this one. I think I had this one, yes, but I missed such a trade. And that's exactly why I did not wait for price to get to the neck of, the daily. Was it this one? I don't think it was this one. I don't think it was this one. Let me check on the weekly. There was one of them that I said I wasn't going to wait for price to get to the neck. Not really sure which one. Maybe on the 4 hours or so. I can't remember. But let me focus on the trade from last week, right? Again, if you look at the daily, so this was when the trade started. And immediately I saw it, I was like, yeah, this is a clear trade as far as I'm concerned. So building from the weekly, we've seen all of those buyers. We are just expecting that price will get to this level to finish the cycle of price and attack liquidity. So we have this open close key level. A lot of people don't like to use open close levels. They think it's weak, but clearly this is where price reacted from. Use these two guys as liquidity points, tapped into that key level, and began to drop. I got my entry much earlier. Let me check something. Yep. So immediately price swept these two guys right here. For me, more of it was even on the 1 hour time frame. So immediately price swept these two liquidity for me. I improvised this as a QM, more or less. But regardless, this is also a block, depending on what you want to look at. It's just multiple confluences. This is still a block structure here, but we don't really focus on that with SLK, but that's extra confluence. We had this sweep, and immediately after I saw a clean rejection from this OCL right here, I had my entry as a 30 minutes QM, right? So took my entry from here. Very risky trade, but it was worth it because I also knew what my bias would be, and it was at the end, close to the close of the day. So I know that based on candle anatomy, the high of the day had already been created. The high of the day had been created. So this was already the high of the day had been created. Market was trying to rebalance back after this tapping into this key level, right? So back to the 1 hour, having my targets at this was the main target right here, actually. But clearly, you will be expecting that price will still drop all the way down into this key level. So basically as simple as that. I'm still very bearish because we have this break of structure to the downside. If you come back in, we have a 4-hour break of structure. So you should still expect that US30 will sell some more. So I have this level marked as my liquidity. I have a daily key level that I'm looking at, which is a disrespected OCL as liquidity. I'm just expecting that price will at least come back down here. I said this thing on one of my other calls. Candles like this that don't sweep liquidity, just know that they are what you call accumulation candles. So when you're building bias with liquidity, you are expecting that there will be an accumulation. There will be a manipulation above the range, a closure within the range, and an expansion. So my expectation between Monday and Tuesday is that at least Tuesday or so, there should be an expansion after, Monday candle closes. Again, you don't need to trade on Monday because as you can see, Monday is likely going to be a manipulation candle, right? So if you want to get an early entry, yes, if you know what you're doing, you can quickly enter if you see a lower time frame break of structure, just like I did. But you have to really know what you're doing. So that's on my expectation, my trades for last week on US30. My last trade, because I had two trades. I had one, I think it was also on Monday. But this one is my expectation after, just all the trades that I took on, I think it was on Thursday, I took this one. I entered night, evening till Thursday, expecting an expansion on Thursday. So that's it on US30. The cleanest, this is actually the one that I was telling you about, that I was not expecting price to get to the neck. It had happened before on this one. So let me show you on the daily. It happened before. It didn't. You see a very clean price action here on Japan 225, like just bearish. We've hit one liquidity level already, but I'm still expecting this low go. Anyways, you can see here, I missed this trade prior week. You know, normally you might want to expect that price will get to the internal key levels or point of interest within here, but it didn't. So this week I was very confident that I'm not even going to miss this trade. I'm not going to need to wait. I'm just going to look within this fair value gap and, you know, just expect a solid reaction. The error that I made was I went in on this candle. After I saw this reaction, I went in on this candle, but it was too late in the day, right? Nigerian time. So the expectation was that the day would still sweep all of this high and go and find another key level to react from, right? So that's what happened here. And immediately after this liquidity was gone, I had a couple of entries on the 1 hour, right? But my initial entry was already 12-hour from somewhere here, but my stop loss was more or less covering, you know, this fair value gap, right, bro? But if covering this fair value gap decreased my RR, but yeah, but it was fine because I took another entry anyways at the proper zone. After that, there was a fair value gap mitigation. So very easy. We've seen what it was like from the daily. So from the daily, we had this sweep of liquidity and a closure. We had a 4-hour break of structure to the downside. Where was that? The 4-hour break of structure happened only here. So, but we had a 4-hour break of structure right here, right? We had a 4-hour break of structure right here. So immediately after this, you can be confident that, you know, you can be looking for sell. So there was a fair value gap key level mitigation, and you have a third 1 hour engulfing that can be a very nice entry targeting the low. So this was the second re-entry. Didn't quite tap into the particular, you know, pricing level or specific pricing level, but, you know, as soon as it got in, swept liquidity was ready to close. All right, so it was ready to expand. So after this was one of the trades that I think I used to pass the account. Yeah, so that was it. I still have expectations on this one. Again, we have a break of structure to the downside. I have this a lot here, expecting that price might come up here and give me some kind of reaction that we can take down, or it might take this guy out, come use, you know, a key level like this. So this could be liquidity, and then tap into the daily OCL, tap into the daily OCL and forward. All right, so that's the outline I have for Japan 225. We have a break of structure to the downside, and where is it? And we had also a 4-hour break of structure. So we are still bearish. So as I said, we are probably going to just be looking for some form of liquidity to be taken, and then we should be targeting, you know, one of the lows. So Japan 40, we've gone through Japan 40, we've gone through Japan 225, US30. My expectation for gold is, again, we have a similar price action. I have a similar price action here, where we had this weekly high taken. So we have a sweep of weekly high and a closure within. That's a clear rejection. We can also still target as, let me clear this one. Excuse me. All right, so you have this key level also where it taps in. You have this key level where it taps in. and then we have a rejection. So we should be expecting that this low will go. So a lot of people that are buying, you should be buying short term. You should just be only buying short term. As far as I'm concerned, we should still be expecting, like, it's just clearly bearish. I don't know. There's nothing much to say. There was no decisive move. It was just a sweep and then a full engulfing closure on the daily. This is already giving you a daily rejection from this OCL. So you should be expecting that, price will drop down. So even me, I might take it even all the way from the 4 hours. Like, it depends on which account I'm using. If it's a smaller account, I'll wait for confirmation. But bigger account, I might just set my entry somewhere here, a validation here, and my target even lower than all these zones. I don't know if this is liquidity, but this is probably all these zones are still liquidity. Price has failed to break above all these zones. So yeah, it has taken internal range liquidity, is coming down. So that's my analysis for XAU USD. And so we can just do a quick Q&A for the next 10 minutes. So I think you can raise your hands if you have something to say, and I can unmute you. I don't know if Peter is on the call. I have 10 minutes more. If Peter is on the call, can you raise your hand? I think you should be able to, so you can ask him a couple of questions. I don't know if he was able to rejoin. Okay, yeah, Peter is here. If you want to ask your question or you want to wait till later, you can let me know. Let me adjust the settings so that we can still accept. All right, awesome. Got you. Quickly accept the calls then. Can't remember, honestly. Can't remember where my settings should be. All right, so let me stop sharing again. Show meeting. Yeah, I got you now.
Good morning.
Okay, awesome. Good morning. And go ahead, please. We have like 8 minutes.
So, all right. I wanted to ask what you use as a confirmation. What type of engulfing? What you use as a confirmation entry?
From 2 hours engulfing is good. 2 hours, 1 hour engulfing. But there are like 4 confirmation.
After marking your your weekly, your daily, you just go down to the 2 hours. Then if you see an engulfing, you're in the trade.
So from my weekly or daily, I showed the process. I don't know if you were
I was.
Yeah, so that's it. So once I go down to my entry time frame, likely 3 time frame lowers from where I'm building my bias, I just mark out my key levels, and when price gets to my key level, I wait for a confirmation.
All right, thank you.
Yeah. Okay, so let me check if there's any other person. Is there any other question? So you can just raise your hand. I'll try to unmute you. Okay. Cheese ball. Oh, okay, cool. All right, I think I've asked. Okay, cool. So please do again and go ahead. Yeah.
Okay. Thank you for the question. The thing is, the breakdown on Japan 225 was a little bit cleaner than US30 because I was expecting 4-hour breakout, just like the question you asked before. I think it all went down from daily down to 2 hours because we were not able to see the 4-hour breakout and the process from the 4-hour breakout down to your confirmation. I don't know if you understand me, just like the way you build, was it Japan 225?
Yeah,
because I can clearly
as
see
I
you.
said. Yeah, it was cleaner, right?
Yeah. Unlike GER40 and that US30.
Yeah. So German 40 and the US30 was based on time, right? So as I said, I saw the sweep. And don't forget, if you go up to the weekly and monthly, you can see that those 2 time frames. Let me check. I don't know if I'm still sharing my screen. Okay, I am. All right, so very quickly, if you go down to let's check US30 restore. So if you go down to US30, right, you can see that we already have this break of structure all the way on the daily. So actually we are bearish. right? So, and you can, so it's more like you are taking your entry from, because we already have this, right? So from weekly, we have a daily break of structure to the downside. So this is literally,
Yes.
yeah, you have a break of structure to the downside. So this is literally like you're taking a 4-hour entry. This is as simple. Instead of going down to 2 hour, your confirmation is on the 4 hour and you have your liquidity. So it's just, I took my own entries from a time frame higher, basically, than coming down to the 1 hour. Again, it's context. Like, you are clearly bearish. Your weekly is where your liquidity was swept, and you have a target all the way down. So again, if you can't do it, don't do it, or don't, because I took a similar trade on XAUSD the other time. I can't remember where it was, but I took something like that somewhere here. I think it was this one. People were looking for a break of structure, but that's a strategy on my own, and it's also on the QM side, right? So I cannot explain all. I can explain my breakdown, but it might not all align with your SLK 100% strategy. You can even take a rejecting candle. I told you for building key levels, you can build with key levels, so that's a rejection and a closure. But if you know what you're doing, you can actually sell or buy from a rejecting candle. So again, that's another level on its own. So let me allow Isaac. I don't know if that's clear. Maybe there'll be a whole different day for us to like talk about those kind of things. But again, it's partly will be experience. So I hope
Yeah,
that
okay, I
explains that.
understand. Yeah, yeah.
Yeah, Isaac,
Yeah, okay. Good morning, all.
morning, bro.
My question is basically, I want to know where you view your bias from, like the type of key level you use. Is it like the A shape, V shape, the OCL or RBS or SBR, like the kind of key levels you use,
Yeah,
like when price is rejecting from? Now, I have another one too. Sorry. The second question is the engulfing you use. What type of engulfing do you use? Like, is it fully engulf the previous candle or
it has to
just
fully
price
engulf.
moving up?
Has to fully engulf. Has to fully engulf. So since we have more questions, I don't know. I think we might have to continue on Telegram. But see, there's a logic behind an engulfing. First of all, let me take your first question. You asked which type of key levels, and I take all. I take all. I don't like if I see anyone. You saw me take from an OCL. You saw me take from A shape, V shape, A shape key levels, V shape key levels. Most of my entries are around V shape. Disrespected A shape or V shape key levels, right? So you also have QM levels and fair value gaps. So these are all the key levels that I use. So I watch out for, those type of, my key levels are any of these ones. Like if I see a rejection around any of these guys, I'm good. So I don't look for any particular one. I just look for a rejection. And as I said, you can look for a rejection and a closure, but sometimes I look for rejecting, right? Especially for sweep.
Mm.
If there is a sweep, I can take a closing candle. I don't need to wait for a closed candle. Sometimes it just depends. It's lower probability, but yeah. And the logic behind an engulfing is the other participants is at that point is leaving the market. So the buyers are clearly leaving the market and you are seeing that the sellers are taking control. That's the logic behind an engulfing. So if you see it at a key level, it means that, oh, there was a buy and then, buying participants are getting tired and weak and it's the selling participants that are taking control. So you can expect that if it goes beyond that, there will be a retracement and then, a sell if it's a sell situation. So I hope that, yeah, this is not enough time to cover the questions, honestly, but let me take one more. So Olusegun, you can go.
Okay, good morning. Thank you for the section.
Morning, bro. Oh, sorry. You can go ahead again. Unmute again, please. Yeah.
Okay, thank you.
All right.
Okay, I want to ask, how do you study, or
How do I
how can
study?
someone study effectively?
Okay.
Yeah, how do you study the market?
All right. So clearly, first thing you have to review all your trades. You have to review what you were expecting to see in the market and what you saw. So you review even your losses and your wins. So like today we're reviewing the wins, but I have reviewed my loss from my CHF JPY trade. For instance, I don't know if you saw it on the group chat, but I noticed that there was a sweep of the previous daily low already. And so that's how I study. Like I look at the errors, I look at what I was expecting and what happened, right? That's how I study. I also study my strategy. I look for key details within my strategy that I see on the charts, right? It's just so little time left. Like today, again, I was studying candles and I saw that for every time you see a higher time frame rejecting candle that has a very long week like this, there is a fair value gap within it, driving the sell on the lower time frame. So I just look at, my strategy and I look at what happened on the chart. So again, we have a risk management session coming, but maybe we need to look at a study session also. But that's how I study. I look at my trades.